Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously, create dozens of quick lists, display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Thursday, July 9, 2015. The question bar is open, folks. If ever you have any questions, feel free to ask them. First news I want to start off with today on the market is about China. We know for the last few days the Chinese index has taken a big hit. Today the index is rebounding, but because the government adopted some measures that we personally find are too intrusive. First of all, the first rule that they have adopted is that shareholders who hold a 5% stake on the company will not be able to sell any of their shares for the next 6 months. That's actually contrary to the rules of free markets that capitalism is all about, right? And what's going to happen after those 6 months? Second thing, they will also punish short sale that they considered malicious. What does that mean, malicious? So definitely those rules that are being adopted by the government are some additional measures. Of course, this creates some this wave of sellers that was present for the last few days has kind of faded, and this is why we have this intraday rebound on the Chinese index right now, Hang Seng. This rebound too is what that happened in China. It's also what happened also here on the American indices, also on the TSX, but as you can see, it was really short-lived. Now, what to do with a market situation like that, where we actually have resumed half of the points that we lost yesterday, but right now we're going down, but not enough, at least not below the former support of yesterday to be able to take some profit. So the strategy of today is a strategy where those of you who have opened some short positions yesterday on either the Dow Jones, the Nasdaq, or the TSX, well, you should continue to hold on to your position, simply because as long as those index today do not go below their yesterday's bottom, what can you do? Nothing for swing trading, even for day trading, folks. We have recommended some bearish ETF on MarketGurus.tv, but really those bearish ETF have not given us the momentum required to be able to cash in automatically on those ETF. For instance, let's take a look at some ETF here that we put on marketgurus.tv. We put an ETF like HXD. That ETF is an ETF that we still have in our analyst choice portfolio that was recommended yesterday as a buy opportunity. Today the ETF is losing minus 0.82%. It did rally slightly, but now it's stabilized. Is it an ETF, if you bought it yesterday, that you should close? No, I think it's still an ETF you should continue to hold on to as long as it maintains its upward trend and stay above 470. So this is actually the strategy. Today it's a timing where you should continue to hold on to your positions, and there should be no panic there, because if we take a look at the market situation, we're having a rebound today, and this is actually the beginning of a neutral formation that is starting to form itself in the market. And also as well, it's a lot of sectors have become neutral. So when we have a lot of sectors that are becoming neutral for swing trading, it's a no-go at all. We need a clearer cycle either on the upside or on the downside. But so far on marketgurus.tv, the view that we have is more bearish. Now I want to bring into your attention one news there about this company here, Pacific Rebuilds. A lot of people talk about this company, Pacific Rebuilds. Today, the company that proposed to acquire them, Alpha, which is the group of Alpha and Arbor Energy, they say that they are withdrawing their buy offer, so they will not move forward with this buy offer. We know around here that RBC told to investors of Pacific Rebuilds, look, sell your shares, because it's really probable that Pacific Rebuilds buy offer will not go through, because shareholders, one of the biggest shareholders, which are from Venezuela, they are against this buy offer. So this is actually one of the reasons why Pacific Rebuilds today lost all of its gains, and now it's back to the $3. So it's really negative there for Pacific Rebuilds. Also, I want to bring to your attention that we have one news here that didn't create much momentum, but that could change the marijuana industry, because right now Health Canada has allowed those marijuana producers, Tweed Marijuana, Bedrocan Cannabis, we know they will merge, and those two companies here, they will be allowed to sell products with higher margins, such as cannabis oil, marijuana oil, or other derived products. So more money and possibly a change in the entire industry of the marijuana sector. But so far, no stock is really reacting to that news. We have Organigram Holding that stays neutral, Afria that stays neutral. Here's actually a bunch of stocks on that list, though. Most stocks are on the OTCBB. This is why we have an L there, but those are the ones that are actually trading on the Venture Index, and those are our Canadian companies involved in the marijuana sector. So those stocks have to be watched, I think, with this new regulation. As I said, BED and TWD announced a merger. Now, it was announced actually a couple of days before. Now, we have some questions here on CIA from Jay. Champion Iron, should I buy? Well, Jay, look, one thing you could look at, when a stock has surged by so much and has pursued the rally for the last few days non-stop, now you need to ask yourself, what are the indicators showing? First indicator I'm looking at is the stochastics. Stochastics showing me it's overbought. Not by looking at any indicator. Let's just take a look at the trends, and we see that Champion Iron Mines has reached its downward trend there. So it's testing a downward trend. It's overbought with the stochastics here. For me, it's not a buy. At this point, Champion Iron Mines will form a sideways formation. And I think it's in a good situation to be watched, because this triangle formation, though, if ever we could reverse it, if ever Champions could go above 17 cents, that would be a great buying signal, because this downward trend that lasted for the last few months since September will actually become an opportunity where Champion Iron Mines could reverse that downward trend. So watch that stock around 16 cents. That would be a go for a buy. But right now, I think with the sideways formation that's going to continue, it's not worth it to get it into a stock like that, because there's still a risk with this overbought situation that this decline could even go lower than 11 cents, right? So this is why you have to remain patient, see when can the stock form a sideways formation, and so far it's not a buy. So Xavier here bought Sherritt. Long-term investment, should I hold on to it? If you bought Sherritt for a long-term investment, I think for long-term, what you're betting on is because, you know, Sherritt, I think they have, I think they're involved in Cuba or something, especially with the regulations right now, with the diplomacy that's going on between the US and Cuba. Stock like Sherritt will benefit, of course, from that. So if you're into the long-term on Sherritt, look, staying technical on Sherritt, the stock on a yearly basis has broken an important support. So staying technical on a stock like that, for me, it's clearly today a moment to get out on Sherritt, because that support here has actually been broken down. It's a support that is really important, and the fact that it's breaking it down, for me, it's really negative. So Sherritt, it's a stock you should get out of. Now, if you have a more of a long-term horizon, where would be the other opportunity to get into a stock like that? Because as I said, with what is happening in Cuba, Sherritt will benefit from that. But so far, it's still too early to say how they could benefit from that. Now, get out right now. What will be the next entry point on a stock like Sherritt? If the stock can actually reverse its downward trend. So for me, for Sherritt, as long as it doesn't get back at least above $2, that stock will not be a buy. And even if you do have a long-term horizon, though, getting rid of a stock now doesn't mean that you can buy it later, right? But you're going to need to buy it and respect also your exit point, even if you're not long-term. Because for me, when I consider long-term, I also consider the stock on a yearly basis. And so far, by looking at how the stock has performed, look, we still have this downward corridor that is there. And look, we're breaking that important support. So looking at this downward corridor, we cannot actually make a projection. We could even go lower than $1 on a stock like Sherritt. And this is one of the reasons why I think closing your positions right now, it's good. You minimize your losses, and you'll get back in when the buyer's wave is coming in, and that will be around $2 on a stock like Sherritt. Even if you have a long-term horizon, Xavier, I think it's wise to close that position just to minimize your loss.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So Pat has a question here. What do I think of SSO? SSO, Pat, is so far a stock that's resisting. I think it's in a nice situation. A stock like that, it's clear that the exit point is around 721. I love the stochastics. The 10-day is about to cross the 30-day moving average, which will be a bullish signal. Now, getting it into a stock like that, 730 is your exit point. But what I love, though, is that even if silver, gold took a hit, a stock like that, I still kept its upward trend. So this is something that I love with a stock like SSO. I don't know if you have a more to medium to long-term horizon on a stock like that, but for me, if you want to get into a stock like that today, put your exit point at 740. That is actually the strategy I would favor on a stock like that. And along the way, while the stock continues to maintain its upward trend, which I think it could do so, because The momentum indicators are showing us that the wave of buyers is consistent. Well, take some profit along the way. And your exit point, if you're buying today, becomes now at 7.30. But are you willing to tolerate the loss from 7.95 to 7.30? That's the question you need to ask yourself, Pat, on this one. But definitely, yes, SSO, compared to a lot of silver stocks, that stock is one of the stars. So good choice there that you mentioned here, Pat. Now, Anon, when becoming a member of Market Gurus, there's an analyst choice. True, because every day on Market Gurus, not every day, when the situation allows, when the market situation is favorable, according to our analysis, we recommend analyst choices. So this is actually the section here on marketgurus.tv. It's called analyst choice. So around 3 o'clock, this is where we know you have an analyst choice. For instance, you can pick up the date, see if we had one yesterday. For instance, yesterday we did have some analyst choice. We had 3 choices. So among those 3 choices, we had HXD, TZA, and Faro. Those were our analyst choice. Now, would you talk about the way you incrementally add to bearish ETF, or do you work increments, wait for profits before adding more? Well, I'm not sure if I really understand your questions, but this is actually how we proceed. First of all, in our analyst choice portfolio on marketgurus.tv, we do have several bearish ETF. But yesterday, what we said is that we're feeling comfortable to add some bearish ETF, but because we already had a lot of positions among other bearish ETFs, such as SPXU that we have in our portfolio that we recommended as a buy around here, that we still have, such as ERY that we have recommended also as well, I think, around this area on marketgurus.tv. So those ETF are all ETF that we have in our portfolio. And yesterday, when markets went down, we're feeling okay to recommend some ETF. However, what we said is that instead of opening a full position, because usually when we recommend a stock in our analyst choice portfolio, we take a position of $10,000. Now, when we say it's a half position that we're incrementally adding to our bearish ETF, we recommend half positions. So instead of a $10,000 position, we're taking a $5,000 position. And the analyst choice of yesterday that we had in our portfolio, such as HXD on the TSX, TZA on New York, we did recommend half positions on those ETF. And the reason why, the thinking why we did that is because, technically speaking, we said to ourselves, look, we think that today it's a great timing to open some bearish ETF. However, there's still a risk that we might have a rebound. So this is wise to not have full positions with the new bearish ETF that we're adding, but rather half position. And of course, we're not adding ETF just for the sake of it. When we say we're gradually adding some ETF, it's to actually not have to tolerate such of a big loss, because with the days of decline that we had in the last few days, this rebound here was really likely. Now, do we take some profits before adding some ETF? It all depends. Sometimes we take a look at our portfolio perspective. In our portfolio perspective, we have more of a short exposure. And on several of our short positions, we have already taken some profits on them. So it's not necessary that to add a new bearish ETF that we have to take some profit on our previous one. For instance, ETF such as SPXU and ERY that we had for a while in our analyst choice portfolio, we have not taken some profit on them yesterday. Why? Because we still believe that the market has the probability to continue on the downside. And this is one of the reasons why we have preferred to wait on our past bearish ETF. And the new ones that we added yesterday, we prefer to recommend a half position, not a full position, because we believe that there was a probability that a rebound could happen, but it was going to be short-lived. And when the decline continues on the market, what we're going to do, we're going to take some profit on our past bearish ETF, SPXU for instance, and also we're going to be able to cash in on the new ones that we added yesterday. Of course, we're not going to make as much money because we took a half position, but at least we'll be able to take some profit along the way. So I don't know if I answered your question right, Anon. If not, try to rewrite your questions or try to mention specific aspects that I didn't cover on my answer. But I hope I answered your question here in terms of the thinking for analyst choice portfolio. Now, as for the day trade of the day, It's that stock here, Xoma. Xoma performed really well today. One entry point here, another one there, and could give one here higher than 445, 442. But this is the first uptick that we have. We need a second uptick on the upside on a stock like Xoma before confirming a clear entry point for day trading. As for swing traders on a stock like Xoma, man, it's reaching a resistance, overbought on a yearly basis. No, for swing traders, it's a no-go. I think if you bought that stock for day trading, make sure you take some profit today. Do not hold it overnight. That will be my advice on a stock like that. So a boring day on the market, a day where you should hold on to all of your positions, especially for those of you who bought some bearish ETF yesterday. With today's rebound, we just have some sectors that became into a neutral cycle, but no moment to panic, no moment to close all your short positions, because so far the rebound remains really fragile, and we saw that all this morning's gains, we have lost them. So see you tomorrow on the Swing Trading Show on DecisionPlus.com.